Welcome again to Markets by Lee, where we aim to study each candlestick form. On the last lesson, we covered what a candlestick was. And in this session, we're going to be looking at market structure, interpreting a group of candlesticks. But before we go into that, let's just do a quick recap on what the hell candlesticks are. Well, as we would have discussed, a candlestick is just a visual representation of price movement over a specific period of time. On most platforms, we know that a candlestick will have either of two colors. Typically, a green candlestick would represent higher price movement, and a red candlestick would represent lower price movement. Now, as for the elements of a candlestick, all candlesticks will have a open, a high, a low, and a close. The color of the candlestick is dependent on the close. Now, other elements of the candlestick. Now, the area between the opening and the close will be usually called the body. The highest and lowest price on the candlestick would be the low or the wicks. Now, we did mention that candlesticks by themselves, while they are valuable, it's very important for us to study a group of candlesticks. It's especially valuable when we look at the consecutively formed candlesticks. They help us to get or frame an idea of how the next candlestick or group of candlesticks is likely to form. This whole idea of studying the group of candlesticks is what would define what is known as market structure. Market structure, again, being what we're going to take a more in-depth analysis of or review of in today's lecture. Now, market structure, interpreting a group of candlesticks. Now, by definition, market structure can be defined as the general behavior of price over a period of time. Now, you might be able to see how this relates to a candlestick. On the screen, you would have seen two visuals come up. One representing the familiar candlestick and the other an inside view of a daily candlestick. This second view is what market structure is really about. Looking at the groups of candles that were formed. Now, similarly to how we have two types of candles, one being a up close or a green candle or a red candle, we also have two main types of market structure. Market structure can be defined as either bullish or bearish. Bullish would mean that price is being observed higher over a particular time. And bearish would mean that we're observing lower prices in a particular time. Now, question, is this price or group of candles representing higher prices or lower prices? Again, is it bullish or bearish? Now, if you would have looked at the previous slides or was paying close attention, it's a dead giveaway. This chart would have been representing bullishness as new highs are being made. Now, for those who didn't get this one right, you have a second opportunity here. What is this group of candles telling us about the structure? Again, I know you got this one right. It's telling us that the price has been bearish. Now, when we're looking at the actual markets, we do have two things to consider when interpreting a group of candles. Those are the candles telling me that the price is going bullish or bearish? Is the price going up or is it going down? Well, expectation doesn't often meet reality. On the left hand side, you would notice a chart. Both of these charts that you're looking at, by the way, are indeed bullish. However, might be difficult for us in the second chart to decide whether or not the price is really going up, as the last set of candles that we're seeing would appear to be going down. Similarly, in the bearish case, whenever we're looking at the candlesticks on the left, it's very clear. Most of the candles appear to be going down. But on the right hand side, the market or the price seems to be going up. So is it really bearish? Well, that gives us the question of how do I navigate the reality? How do I decide if the market is indeed bullish or it's bearish? Now, the answer will come in the form of a simple framework that you can use. Look at the range. Look at the high and the low of price that you're currently observing. For the most recent price that you're looking at, define your range by looking at a low and a high. Now, for the bullish case, if the price has not passed your low of whatsoever range defined, on this chart, we're defining the low to be that one and the high being that level up at the top there. And given that the price has not yet passed our low, we're still considering this overall price to be bullish. Again, the market structure is the overall price movement over a specific time. And for these candles that we're looking at right here, the price overall is still going up. Now again, with this second scenario, let's look at the high and the low of these candles. Is this bullish or bearish? Again, we will look at the range, look if the candles have passed our high, and if not, we will still consider it bearish. And this is the case for these candles. This market would still be considered bearish in our eyes. Now, there's a concept that I want to introduce you to, because in the earlier candles, you might have noticed that, hey, at some point, the market seemed to be going lower, and at another point, it seemed to be going higher. So what are these levels called? Now, navigating the reality still, what is a higher low? Now, a higher low would be the lowest candle form just before a new high is created. So let's say that we defined a range and we have a high and a low. The market seems as if it's going down, but it hasn't yet passed our low. Then a couple candles after, it goes above our high to form a new high. That most recent low would be considered the higher low. On the inverse, if we have a high and a low, and at some point the market was going up and not yet took out our high, then once it makes a new low, that high point that was formed would be considered to be a lower high. Now, this is a lot of information, and if you're new, it might be difficult for you to get this right away. So I would encourage that you review this video and to ask yourself these questions throughout the way. Do I really know when a market is going higher? That means it's bullish. Or do I really know when a market is going low? It being bearish. Now, for the next time, we will dive more into this with a live demo so that you can follow right along. Because I know that not a lot of us are actual theoretical. We're more visual learners. So for the next time, we'll cover a few topics. One being, where can I access candlesticks? Where can I view them? Importantly also, what price am I looking at? And we can begin to set up our platform so that we can also follow along studying candlesticks one at a time. But until next time, thank you for listening. Markets by Lee, and I'll catch you in the next one.